Secretariat. And it is a great honor for me to moderate the first section of this very important event. I will also be speaking on behalf of Charles Omusana. I think from the onset, I would like to state that this webinar is timely. It's a good thematic area for us to reflect on, because we all aware that payment systems play a key role to facilitate the key integration pillars, and that's the customs union and the common market protocol. So integrated systems are critical for us to realize this, because they help to facilitate the payment of goods and services and cross-border cash flows or flows and remittances within the region. I think it's a subject that the private sector doesn't discuss a lot on. It's actually new for me, but it's also an area that I think we need to reflect on, because it does have a cost implication in terms of doing cross-border business. So without further ado, I would like to invite Mr. John Bosco Kalisa, the CEO of East African Business Council, to give his opening remarks.
Good morning, everyone. First of all, allow me to thank you, moderator Waturi, for moderating this important session. Indeed, as you rightly put it in your opening remarks, this is a new area for private sector engagement and private sector development. As the EABC, first of all, allow me to appreciate EU Africa Rise program. I can hear an echo. I can hear an echo from Juliet. If Juliet could mute yourself, please. Yeah, I was saying that before that interruption, that we EABC, first of all, we record our appreciation to EAC Secretariat. That we record our appreciation to EU Africa Rise program for their continued support in terms of knowledge generation on very important topical issues, including the payment system. Allow me also to record my appreciation to the panelists from the central bank, who have spared their precious time to come and share insight about the integrated payment system and what can the private sector benefit from various instruments that have been putting forward. Indeed, when I was looking at cross-border payment system, I realized there are three important issues that we need to reflect on. One of the issues is the transaction costs in terms of the existing instrument that the banks, our banks, regional banks that have been using, such as RTGs, SWIFT. These instruments usually they are designed for corporates. But as you know, the EAC private sector is dominated by micro, small, and medium enterprises, who constitute almost 80%. Sometimes it becomes a daunting challenges in terms of using this SWIFT-related system designed by our commercial bank, our central banks. So that has an implication or a repercussion in terms of our payment system and in terms of fast-tracking the payment system. One, when I looked at the data, that you find that through these systems, we always incur a cost of around 10% of every transaction. That's a huge amount of money for using all these instruments. So I'm happy that when we are going to discuss, before I dive deeper into my presentation, let us reflect on the instruments that are available within the region in terms of fast-tracking cross-border payment. Recently, when we had a webinar on trading services, on the barometer in trade and services, I was very happy to hear from our consultant that the financial sector, financial inclusion is moving at a positive strides, a positive rate. And if that is happening, then we should it should be also be complemented by the other instrument payment systems that are available. I'm happy that during this webinar, I've invited the Deputy CEO of Pan-African Payment and Settlement System, John Bosco, my friend Sevabi. He will also be sharing what the Afrexim Banker is doing in terms of reducing the transaction costs, in terms of making sure that the highest transaction costs that has been happening, that has been impeding intra-regional trade. Now we are talking about African continental free trade. How do we bring on board such instruments like the PAPs? But before the PAPs, I was also looking at the performance of East African payment system, which was launched in May 2014. And it has been heavily or largely hampered by limited commitment by the partner states in terms of integration, in terms of harmonization. I think that instrument, since it was designed, there has been a limited implementation about IPS. So apart from Kenya, I saw that the uptake was very high in Kenya, but in other countries, the uptake has been very, very, very low. In terms of, and again, when we are talking about monetary union, I think East African payment system should be one of the criteria or one of the conditions that would enable the monetary union to thrive or to be realized. Despite that, the conclusion of it has also overdelayed. So let me just give you some key highlights in terms of the transaction volume that currently that are being used. Again, private sector, let me put it forward that private sector, we cannot wait while the government can afford to take their time, but private sector are always coming up with innovative systems of innovative instruments to enable trade to happen. Especially, I realize that the M-Pesa has been one of the instruments that was able to unlock and infuse some of innovation in the region, that there is a higher uptake using mobile money than even using the banking instruments. Because now, as I mentioned, the big segment of our society are constituted by micro and small, so they need a kind of a soft, faster, efficient system to transact across borders. That's why the uptake of mobile money is high in the East Africa than any other region in the world, because of the our thoroughness in the banking system to come up with an integrated solution. So as we move forward, as we deliberate, again, when you look at the economic effects of mobile money access to the EAC economy, one, it's important to put on record that it has generated double sword benefits. Mobile money has been very efficient. It has reduced transport and transaction costs related to cash transfers. It has saved time as well as costs in terms of transaction, in terms of moving money across borders. It is very faster. It is easier to use. It has also increased the insurance coverage, and it has helped consumers mitigate some of the risks that are associated by other banking instruments, because they take time, and business doesn't have time to wait. So through that, I see we have seen really a benefit and the growth of mobile money across the EAC as one of the instruments, as one of the payment instruments. I was happy that one of my member mentioned that sometimes it is required to disrupt government and you move forward, because but you couldn't wait for the regulations or regulatory framework to allow mobile money to start thriving. It is recent that the bank have realized that mobile money is crowding out their space, And now they are trying to catch up. Our banks are trying to catch up with M-Pesa. They are trying to catch up with the mobile money networks across the continent, and they are now coming to the speed. So as we move forward, as we deliberate on this important subject, I think one issue that we, as EABC, we've been grappling with is again having an enhanced legal and regulatory framework for this instrument to thrive, to work, including mobile money. Two, differences in tax administration on mobile money transfer in EAC. Again, we've seen that our governments are not doing justice to our society in terms of imposing taxes on mobile money transfer, which is not right. Again, as we move towards the digitization and moving towards a knowledge-based economy, we need to reduce those costs related to taxes that we impose and levies, such as VAT we impose on transfer or use of your mobile. And where I sit here in the United Republic of Tanzania, you find 18% VAT on transfer fees payable to banking and non-banking institutions. So we cannot. Uganda is also applying 0.5 tax on withdrawals since November 2018. The same has been introduced also in Tanzania. Kenya applies exercise duties on fees for money transfers. So these taxes, charges, fees are being detrimental. They are impacting on our ability to move towards the digital economy, and we need to advocate for the removal of such unnecessary taxes on mobile money usage if we want our big segment of society to use these instruments. So corporate taxation also is very high. I think except South Sudan, but other countries also charge license and spectrum fees on telecommunication sectors. And to me, this is a sector that is complementing the banking sector and should be supported, should be embraced, other than continue imposing heavy charges on the operators in those sectors. And our regulations are very heavy, especially on telecommunication and banking. And as EABC, we argue for dismantle and removal of such unnecessary fees and charges, especially for mobile money and banking services. So as we move towards the enabling environment for mobile money growth in EAC, one, again, we want to recommend the following cross-border. We need to ensure that we promote cross-border interoperability at the EAC level as a regional bloc, aspiring to achieve more integration. The EAC member states should continue their work towards adopting harmonized legislations on payments, including electronic and mobile payments. Collaboration need to be enhanced between ICT and financial regulatory institutions. There's the need to collaborate between two regulators, communication and financial, because their role, we see that their role is very intertwined. So interlinked, they need to work together. Other than competing, they need to be complementing each other. So we need to ensure that we create a linkage between the ICT and the financial regulatory institutions. Again, we need to continue to harmonize, remove those unnecessary transfer charges imposed on mobile money and other financial instruments. We need to invest heavily on KYC to mitigate fraud and transfer risks that are associated with all these financial instruments. So those are some of the areas that I think we need to ponder on, we need to reflect on. I'm happy that we have good experts from all the banks are going to share insight. But in our view at the ABC, that the charges are uncalled for, they are detrimental to our ability in terms of moving towards the digital economy in the East Africa. Otherwise, I want to appreciate everyone. I want to appreciate all the participants. I want to appreciate the panelists, appreciate our funder EU, Africa Rise program for continuous knowledge sharing, knowledge generation. That is the way to go before we get go into the funding. but at least we know where the challenges emanate, and we are able to come up with a concrete, viable solution to address this issue of cross-border payment. With that, again, I want to thank our moderator, Madam Waturi, for the good work, your colleague, Nathan Gashaiza, Omusana, the entire EAC and EABC staff, Geoffrey, Patrick, and others involved on this subject. Finally, media fraternity that are here, that are able to inform our public about the challenges we are grappling with, why sending money across the region is very expensive, and what are the binding constraints to integrate our financial systems. Thank you very much, and I wish you a very fruitful deliberations.
Thank you very much, JD, indeed, for a very, very comprehensive, your very comprehensive remarks. You have highlighted the key issues, but I think you've highlighted the key issues mainly from the retail banking perspective or retail banking transaction perspective. And we will get an opportunity also to understand how this works and why those costs are high from the national payment systems perspective. And we look forward to hearing from the national banks that could be here, the central banks that are here, or that are represented by a very noble set of panelists. I would like to now invite the EU delegation representative, Mr. Jocelyn Cornett, if he's here. I would like to take this opportunity to thank him for funding this particular study that was done, and for being part of and a strong partner actually to the East African Community Secretariat and to the East African Business Council in trying to create an enabling environment for regional integration to thrive in this region. So without further ado, I'd like to invite Mr. Jocelyn Cornett or a representative from the European Union. Thank you. Any representative from the European Union or from Africa Rise?
I can see Paul from Africa Rise, Paul Becker.
Thank you, but I will be the one presenting, so perhaps it's better if somebody else has any introductory remarks.
Well, good morning, everybody. I guess that means me. I'm John Clifford. I'm the team leader of the Africa Rise programme. I'm sorry, I'm not really dressed for this, but I will put my camera on for a moment just to speak to everybody. I will keep my remarks very short because there are far more important things to do. I would like to thank the officers and staff of the EABC and the EAC Secretariat for the efforts they put in organising this webinar. And without further ado, I hope it's interesting and useful for you all, and I wish you a fruitful discussion. So back to you, moderator.
Thank you very, very much. And again, I want to thank you for your support in this particular area to help us understand the national payment systems environment or ecosystem in East Africa, to understand what the challenges are, and looking ahead at what we can do to resolve these issues. I think without further ado, I'm going to invite the presenter to make his presentation on the harmonization of payment platforms. And then from there, we will invite discussions on the presentation from the participants. Thank you. Fred, I believe that is you. Fred Baker or Paul?
Hello. Yes, hello. Let me just organize to share the screen. Good. I think you can now see the screen. Good morning, I think, for most people on the call. It's a pleasure to be here, and indeed, we, under Africa Rise, we prepared this concept paper looking at the payment systems in East Africa, but also globally, so making reference perhaps to what's happening at the global level and some of the best practices, as well as what's happening at the continental level as well. So we'll be presenting the findings of that concept paper in this particular session. And then, of course, we'll be opening it to the floor if there's any questions around that. Again, also, yes, to thank the EAC Secretariat and the EABC staff for inviting us to do this. I have been involved also with the Smart African Alliance looking at the digital payments blueprint for Africa. So we've also sort of leveraged some of the findings under that initiative that is also looking at some of the challenges at the continental level to try and move the payments landscape forward, making transaction costs cheaper, but also democratizing the access to the financial system as well across the continent. Because the audience, I think, is quite wide, we have indeed some specialists, we have some regulators with us, we have central bankers, but we also, if it's possible to turn off your mics, yep, thank you. We also have policymakers and more generalists that are interested in particularly into trade and investment opportunities in the region. There is quite a lot of introduction. There's a lot to gather in terms of understanding the landscape and making that situational analysis before we can move forward on the challenges. So I'll be presenting for around 30 minutes, and then we'll have 30 minutes, hopefully, for discussion. So the structure of the presentation is, first of all, why is it important to move forward? And I think John Bosco has already highlighted the reasons why. Transaction costs are high. It's still not very easy to make payments across the region. And that is obviously a bottleneck towards developing e-commerce and trade in the region. And it will become even more of an issue under the ACFTA, since we need to be able to connect to other regions to be able to make transactions. Second part is really looking at what's happening at the global level and the different African payment systems. Some are much, much more advanced than others. And so we'll just very rapidly explore what's happening at the continental level. Then where are we at in terms of the EAC right now? Next, what are the challenges for making cross-border payments? And unfortunately, we have a lot of challenges that are still in place, and these need to be resolved, of course, moving forward. And then really some suggestions as to how we might move forward, how we might try and focus our attention on some areas that could make quite a big difference in terms of trying to harmonize these payment systems. So looking forward to quite a lively debate after the presentation. So why is it important? Well, as we know, the East African community aims for quite a high level of regional integration. Ultimately, it will be a political federation as a final step towards that regional integration process. At this stage, we're at the common market phase. And the next step, which is by 2023, would be the setting up of a monetary union. All of this is embodied in Article 5, Paragraph 2 of the Treaty for the Establishment of the East African Community. So in 2010, we already had this Common Market Protocol, and that pushes forward the idea of free movement of people, services, labor, and capital. And there are other aspects to that, but obviously a payment system that allows you to be able to pay for these services across border and movement of labor is going to be quite critical, as it is for goods and for capital to be able to move. Eventually, of course, the monetary union aspect would lead to a single digital currency a single currency. Obviously, a digital currency will come into force at some point, but for now, a single currency and the setting up of a central bank, so a regional central bank. And that, of course, requires the alignment of fiscal and monetary policies. If that is not achieved at the regional level, we have some of the problems that we faced in the European Union if that harmonization of policies doesn't take place. So in all of this context, of course, an integrated payment system is really critical to realize these 4 levels of freedom, because they will facilitate payments for goods and services, the cross-border flow of capital, as well as the remittances within the region. So as John Bosco has said, at the moment, the system as it is an obstacle to full freedom of these different movements of factors of production. So just very quickly, in terms of the monetary union, I think I've touched upon that. But under the Article 15 of the EAMU protocol, the partner states agree to develop similar systems of payments and settlement to provide a smooth flow of financial transactions within a monetary union. So there is already this commitment by the different member states of the EAC to actually move forward in this area and to find a way of actually standardizing the information, the protocols, and the standards across to make payments across borders. In the 6th EAC development strategy as well, which runs from 2021 to 2025, there is also an emphasis on strengthening the financial and banking systems to achieve the goal of consolidating and transforming the regional economy. And within the financial sector, it's deemed critical that there is this implementation of the monetary union, and it identifies within this development strategy a number of work streams to prioritize frameworks towards deepening integrating the financial sector within the region. And some of these strands are looking at developing safe and sound national and regional clearing and payment systems, reviewing and harmonizing existing legal and regulatory environments for a safe and secure payment system, and then harmonizing the legal licensing, supervision and regulatory framework to make it easy for financial institutions to operate in other member states. It's possible to turn off the mic. Thank you. So there is already a work program around that. Indeed, I think, as John has alluded to, perhaps John Bosco has alluded to, perhaps it's not moving as quickly as we would like. And again, this is a stock-taking exercise to try and see where we're at and how we need to move forward in some of these areas. Riding on the digitalization wave and the digital economy, which was also mentioned earlier, that of course East Africa is trying to move towards. And I should just say that the African Union is also working towards a strategy to move forward on the regional single digital market for Africa. At the East African level, the World Bank collaborated with the East African Community Secretariat to establish broadly what would be the roadmap to move forward with becoming a deeply integrated and digital investment, innovation and growth hub. So there are 3 layers to that vision. First of all is creating a single connectivity market. So that's the telecoms infrastructure and the services ecosystem deployment around that infrastructure. There is a single digital market, which is the exchange, storage and processing of data across borders. So that's the free flow of information across borders. And then creating a single online market, which is to be able to access and deliver public and private services online within a single market. And so digital payments within that framework are identified as one of the core elements in the single online market layer to enable East Africa to pay for domestic and international services. It was suggested in that digital single market roadmap that to facilitate seamless, low-cost cross-border digital payments, the EAC needs to fully establish interoperability between the mobile money operators, both domestically and regionally, with a view towards lowering the fees for cross-platform and cross-border transactions. Another area that's needed is to pursue initiatives to reduce currency exchange fees as an interim solution in the absence of a single currency union. Of course, once a single currency comes into force, this problem of exchange rate commissions will be eliminated, as well as the need to harmonize laws and regulations that will affect the availability and ability of traditional electronic payments platforms to operate, such as mobile wallets and traditional credit cards. So these are the plans as to how do we try and move forward. If we look at the international level, first of all, what do we understand by the payment system? It's obviously a very complex, multi-layered system that involves many different parties. The Bank for International Settlement offers a fairly good definition of what we can consider as a payment system, which is a system that consists of a set of instruments banking procedures, and interbank fund transfer systems that can ensure the circulation of money across borders and within borders, of course. And so such payment systems are important components of a country's financial system, and they channel capital flows to facilitate the economic growth within an economy. The payments system can be decomposed into the payment instruments themselves, as well as the infrastructure on which those instruments lay over. And then there are the financial and non-financial institutions which are parties to that payment system. And then there is the regulators, the regulatory framework for the operation of such a system to make sure that it is operating transparently and securely. The payments infrastructure can be looked at from its components such as the real-time gross settlement system or an automated clearing houses. That's also can be viewed as wholesale payment systems or retail payment systems, so much smaller scale payments that go through it. And what we see in East Africa, as we'll go to next, East Africa has both of these systems operating in parallel. It can also be seen as front end, which is retail end user facing environments, which represents the payment methods used by individuals, businesses, and governments. Through the means, for example, of payment cards, mobile wallets, or bank transfers. Or it can also be viewed through the back end, which is the architecture and cross-border payment services, with the 4 different interlinking models, which are illustrated in the diagram that we see in this slide. So the correspondent banking model, the interlinking model, the single platform model, and the peer-to-peer model. And regarding the institutions, the national payment system, or NPS, often consists of central banks, the government, commercial banks, financial institutions, and payment systems providers. There are several pieces of legislation or coexisting pieces of legislation that are necessary to operate this particular system. So the first group of laws are really guide the operations of banks, including the central bank law, the banking law, as well as regulations by central banks, which guide the licensing and operation of commercial banks. And then there is normally a payment systems law, which is a necessary legal basis for services and instruments in the national payment systems. And then where there is electronic money, then we also will see regulations being enacted to also regulate specific either CBDCs or other types of cryptocurrencies that need to be covered under the payment systems law. Certain references to payments and settlement can also be found in the securities market laws and foreign exchange management laws, as activities in these 2 areas have a close link to the monetary flows. And then finally, we will have Civil and Commerce Code, which may provide relevant provisions regarding payment and settlement related issues, such as in recognition of legal concepts and the validity of different payment arrangements. So it's quite a complicated legal framework that's necessary, sometimes quite out of date in some countries, that also needs to keep up with some of the advances in both the processes, but also the technology underpinning the payment systems. According to World Bank Payments Systems Survey, GPSS, the latest available survey is published in 2020, but covers 2018 data. What we see is that generally global payment systems have seen an improvement generally. Across the world, we have 120 jurisdictions that have at least one RTGS system in that year of 2018. And there is an increasing use of international standards and best practices for the RTGS systems, particularly with regard, for example, to resilience and business continuity arrangements, if there is energy shortages, or cybersecurity enhancements in the RTGS systems. With regard to retail payments, robust practices such as risk management have also seen steady adoption in traditional systems like the check clearing houses or ACHs. However, direct access to these systems is still very much limited to banks and regulated non-bank financial institutions, obviously keeping out some of the telcos, for example, from that particular market. Technology development has brought about an outlook for the payment sector, which has led to the introduction of new payment products and services, as well as access channels. APIs, application programming interfaces, big data analytics, biometric technologies, cloud computing, and other types of technologies such as quick response codes, QR codes, digital identification, and DLT, and Internet of Things, have all been introduced in some form or another in more advanced economies to try and facilitate and reduce risks in the banking sector. Finally, also interbank messaging systems and clearinghouses have also been revolutionized with technology. So in addition to the long-established service, secure financial messaging services by the Society for Worldwide Interbank Financial Telecommunications, that's SWIFT, other advancements in technology are allowing algorithms and smart matching technologies, as well as electronic Know Your Customer, EKYC, integration that can actually improve existing systems as well. And so the regulators need to be on top of all these different elements to try and push them forward in the industry as they're being rolled out. In Africa, there has been quite a lot of effort. We heard in East Africa, we had the EAPS, which was established in 2013. There have been many other initiatives across Africa, which we can see illustrated in this particular diagram. Just in general, the World Bank's GPSS, the survey that I mentioned earlier, that came out in 2020, actually suggests that Africa is a leader with regard to the availability of mobile money services and the acceptance of payments with mobile money. But they still see a lot of shortcomings and quite large lags with the rest of the world in different payments services, such as merchant aggregation services, bill payment aggregations, automatic teller machine networks, and payment initiation services via third parties using APIs. So that survey is revealing still quite backward procedures in many of the African countries. There are a number of regional payment integration initiatives that have materialized over the years, as shown in the chart. And then with the ACFTA, we've also seen a Pan-African payment and settlement system also emerge, which will be a new system that will enable instant payments in local currencies across the entire continent. It was launched, more piloted than launched, in July 2019 in West Africa, and it's still being piloted across those different countries. It shows great promise, but at the moment, the great difficulty that they're facing, of course, is actually the collaboration amongst the different central banks within the region to cooperate on the platform. So there is still some work to do in this area, and eventually it will be rolled out to the whole of Africa. Conscious of the time, but I think I'm doing okay because the opening speakers didn't speak too quickly. So now moving more specifically to where we're at in East Africa and going into a bit more depth than what was presented before. So East Africa has seen quite a few achievements, including establishing a regional payment systems, the integration of payment and settlement systems, promoting interconnectivity of payment card switches, and there is also the regulatory institutional frameworks that are working together to try and become better harmonized, as well as we've seen many actually private sector cross-border mobile payment initiatives take place as well across the region. Before the establishment of the regional payment system, central banks and EAC did not operate reciprocal accounts, and this means that most transactions had to undertake two sets of conversion charges. The first was to convert the local currency into US dollars, and then the second one would be to convert the currency from US dollars back into the other recipient's country's local currency. So that was obviously very costly because it had to be converted twice. The East African Payment Settlement System, which was established in 2014, is a cross-border interbank funds transfer mechanism, which is used for payments and settlements within EAC partner states. It operates on a real-time gross settlement basis, and it uses the linkages between the various partner states' RTGS systems using a SWIFT messaging network for the delivery of payments and settlement messages to the central bank of a participating country. The transactions are carried out in EAC local currencies, and settlement is through reciprocal bilateral accounts with each central bank. The transactions on the system are charged at the same rate as local transactions in the respective partner states' RTGS systems. The exchange rate risks are borne by the customer and the commercial banks, according to the EAC's report in 2020. Nevertheless, it was noted that the EAPS processes only payments through formal financial institutions, while electronic payments or mobile payments are not yet covered by the EAPS. It's currently operational in between Kenya, Tanzania, Uganda, and Rwanda, linking, as I said before, to the central bank's RTGSs in those countries. Between 2019 and 2020, there were roughly 3,000 transactions worth nearly $500 million that were processed over that particular network. And most of the transactions took place in Kenyan shillings, which was the leading trading currency and, of course, the leading trading nation in the region, with a total value of $340 million. So nearly 2/3 of the amounts being transacted on the EAPS are in Kenyan shillings. There are challenges that are still remaining with the EAPS. There is a very low uptake. The low uptake is explained in part by the reluctance of countries to trade in each other's currencies. This is explained by the fact that a country with a trade surplus will actually hold large deposits in other countries' currencies, and so they're exposed to those countries' exchange rate risks. There is also low volumes of intra-regional trade in general, so that the need to use the system is also quite limited. And then there is stiff competition from banks with established correspondent bank relationships in the region, which may circumvent the EAPS. As a large value payment system, the EAPS is anticipated to garner more activity over time, particularly perhaps with the uptake of the ACFTA, although, as mentioned before, the PAPS is likely to become the preferred route for some of the ACFTA trade that will take place. In the more short term, I think there is little promise for much growth in low value trade flows being routed through the EAPS system. Another system at the regional level, which is also used by EAC countries or some EAC countries, is the REPS, the Regional Payment and Settlement System. It was introduced in 2012 as a single gateway for the settlement of international transactions in euros or dollars within the common market for Eastern and Southern African countries, the COMESA. It includes only 9 out of the 21 countries of COMESA, and it allows banks in member countries to transfer funds more easily within the COMESA region through their local RTGS system in both US dollars and in euros. Settlements are carried out mainly in those 2 currencies, but it does allow for other currencies to be used as well, such as the pound sterling, the South African rand, and the Japanese yen as well. Uganda, Rwanda, Kenya are the only 3 countries in the EAC that are connected to the REPS. And Burundi also aims to actually implement this initiative at some point, so it hopes to join the RTGS as well. Obviously, the disadvantage over the EAPS is that it doesn't transact in local currencies, but it is a more established routing system, and it keeps hold in foreign currencies, which is attractive to some banking institutions. There is also ongoing work under the AFDB's funded EAC payment system and settlement, payment and settlement system integration project. Difficult acronyms to pronounce. The EAC PSSIP, which involves an automated transfer system that incorporates both the RTGS and the ACH that supports the clearing and settlement of high value and lower value retail payments as well. The project also has supported the establishment, update and implementation of the national payment system legislation and regulations to ensure the smooth operation of an integrated regional payment system across EAC countries. And the EAC is also commencing preparation for an integrated single payment system for the region, or an EAPS2, which established real-time clearing for low-value retail payments in the region, and a regional switch that will connect to the national switches in each of the EAC.
You've been muted, Paul. I don't think anyone can hear you.
Thank you. Hi, Dan. Nice to see you. Thank you. Sorry, so there's a lot of initiatives taking place at the regional level, which are offering obviously different options to these different commercial banks at the moment, mainly commercial banks. I won't go through all the national payment systems because I think you've already seen the concept paper, which was a short concept paper to read before the workshop. It was only a few pages long. And in there, we do a bit of a summary on what is the status at the individual country level. Just to say that there are different levels of maturity across the region. To provide the framework for the operation of national payment systems, most of the countries have at least one strategy, as well as laws and regulations on a national payment system. And just as one example, I'll just pick the first country on that list, which is Burundi. It's called the ATS system, the automatic transfer system that they employ. And that comprises an RTGS, an ACH, and a CSD as well. Oops, sorry. And a CSD as well. So CSD stands for, let me just remember, the Central Securities Deposit, which are central bank securities instruments that are also transacted through the payment system. The Burundi's ATS system is integrated with COMESA's regional payment and settlement system. At least I think it's been integrated. It was in the process of being integrated, but it is fully integrated as well with the EAPS system as well. So we have a snapshot of all of the different where the different countries are at this stage in that particular concept note of the workshop. Just in general, on top of these national payment system initiatives, which are normally operated by the central banks, the other players too have tried to create an ecosystem of payments across EAC partner countries. So what we see emerging are bilateral partnerships between payment service providers, and these partnerships are blooming. So, for example, we see banks and mobile network operators, or MNOs. We also see partnerships between commercial banks and MNOs and fintechs, or we see between banks and fintechs, MNOs to MTOs, so mobile transaction operators, mobile money transaction operators. And then we also see e-commerce service providers and cross-border payments providers also partnering up to try and improve cross-border payments. We see co-opetition models. So these are collaboration and competition models that are emerging. So they work together. Both parties work together in a way that can benefit both parties. It's through technology infrastructure and channel collaborations. So, for example, mobile money operators like M-Pesa, MTN, and Orange have partnered with international money transfer operators such as Western Union, MoneyGram, WorldRemit, and RIA. So we see that what are traditionally more competitors trying to collaborate to try and improve the payments infrastructure. We also see cross-border payments hubs, which are now offering API integration to connect various e-payment service operators, such as mobile money operators, cards, and online service providers in both inter and intra-African corridors. May I ask if you can please turn off your mic? Thank you. The launch of open APIs across various countries in Africa by the NTPTN group, for example, contributes to the integration with fintechs and MNOs product development efforts. And then finally, we have global and niche player partnerships and acquisitions, which are also driving rapid consolidation in mobile money. So it's a combination of global leaders and niche cross-border e-payments providers have tapped into the African market through partnerships with payment service providers. These partnerships, inter alia, include technological infrastructure sharing, increased market penetration, channel expansions, new customer segments, and regulatory compliance efforts. So, for example, with eKYC. So that's quite an overview of where we're at in the payments infrastructure. And so now moving forward on really what are some of the key challenges that we identify at the regional level. And so, as I say, I think in introduction, the EABC has already highlighted some of these. The cost of transactions is very high in sub-Saharan Africa. What would be considered a global normal under the SDG 10C is to have an average of 3% charge for remittances. And what we see in Africa on average, it's around 8%. So obviously, some countries are higher than others, but it still remains quite stubbornly high across most African countries. And so there have been many efforts to try and reduce these costs, but they still remain high. And why are they remaining high? Well, barriers to these cross-border payments still remain in force. There's a lot of regulatory and infrastructure gaps between countries. There is increasing compliance costs related to making payments. And apart from these compliance costs, there's also the exchange rate volatility. There is the problem of convertibility of exchange rates too. There is a low tradability of some local currencies. There's requirements for pre-funding accounts. There's also bloated value chains, including payment aggregators, taxation, and local and cross-border e-payments and digital marketplaces. And then there is also a dominance of top international MTOs using old pricing structures as well. So there's a lot of reasons which are behind this as well. And on the slide, you'll also see taxation being mentioned as an additional issue. Among all these factors that cause increasing costs for payments in Africa, there's also the problem of de-risking, the trend of de-risking across Africa, and the local currency convertibility issue. So de-risking global banking partners try and terminate correspondent banking relationships with African financial service providers because they're considered to be quite high risk. This is a problem myself as a company has all the time in paying people across Africa. So correspondent banking costs are therefore increased to try and cover the additional compliance and the additional risks associated with working with certain players in the region. We also see smaller banks and cross-border money transfer providers have been adversely impacted, which leading to increased transaction fees. These are the compliance costs and transaction costs are affecting the smaller players disproportionately higher than the larger players as well. Since 2013, most African regions have experienced a significant reduction in correspondent banking relationships, ranging from nearly 5% in the Bank of Central African States to 47% in the Maghreb region. The EAC was the only region in Africa that saw an increase in corresponding banking relationships. However, according to a SWIFT report from 2018, the number of foreign correspondent banks in the region remains relatively low compared to other countries, other regions such as SADC, COMESA, and the Maghreb Arab Union. The other issue is low local currency convertibility, which I will not go into at this stage. Are there any questions, or I can continue? No, I see nothing. Sorry. Good.
Yes, there is a question from Jonathan, I believe.
Yes,
Okay.
thank you. My name is Jonathan. I'm from Gomesa Business Council. And my question is on I've got two questions. The first one is on the high cost of cross-border payments. So you did mention that there's a need for seamless low cross-border payments, but now my question is, in terms of target values, what is the indicative proposed percentage or figure in as far as these transaction costs are concerned? That's number one. And then the last question is on the point where you also mentioned about reducing currency exchange fees. So I'm also trying to look at what sort of interventions are you looking at to achieve this? Thank you. Those are my two questions.
Great questions. Thank you very much for them. On the second one, I will perhaps leave it to the end when I come up with the suggested way forward and what we should try and focus on. On the first one on targets, I think it's quite hard without understanding the local context to actually set these targets. I think setting targets is a good idea, and I'm not sure if it's been done or not at the East African level. As I said on payments remittances, the SDGs states that the target should be 3%. But we also have to take into account regional realities, right? And so maybe it should be 4%, or at least we should be striving towards 4% or 5% in the medium term. And I think we need to have a more realistic assessment of what the infrastructure is like and what kind of target could be achieved in the short run. So I wouldn't like to hazard what it should be. The SDGs suggest 3%, but I think it would be better for the region to try and set that target up. Hopefully that semi-answers your question.
Yeah, it answers my question. Thank you.
Thanks. Good. So yes, it was noted that the African Regional Payments and Settlement System, the RPSS, is not really designed for low-value retail payments. A horizon scan of the African RPSS show that systems have been designed generally for much larger value payments, with virtually exclusive access to banks, commercial banks, except for the SADC RTGS system. Most of the RPSSs categorize non-bank payments as low-value retail payments. So in most countries, despite the fact that large transaction volumes and value actually happen in a much smaller scale, the systems in place are not really yet equipped to deal with such low payment systems. And this gives banks an undue advantage compared to the non-banks service providers, payments providers. So to reform the regional and national payment system, a phased approach was intended that would first establish the wholesale systems and then follow up with the retail payment systems. However, because this pace has been very slow to try and incorporate retail payment systems, this has put non-banks at a disadvantage for quite some time, and that's causing some friction. But that's also why we're seeing private players actually operate outside the system to try and find other alternatives. There is this issue of the regulatory frameworks, which are not always conducive to an efficient payment system. So, for example, the cap on equity requirements for foreign firms, strict licensing requirements, or tight restrictions on cross-border capital, while necessary, at times can be a hindrance to competition and may need to be reconsidered in some cases. Most of the regulatory frameworks in the region permit non-bank providers to conduct cross-border transactions, but it can still take a very long time for a foreign entrant to actually receive such approvals to set up and to operate and to reach time to actually reach the market. So it's justified in some cases, such as in countries with foreign exchange shortfalls or currency controls. Some of these requirements can actually limit the number of players who can offer cross-border money transfer services, and it can even, affect global coverage as well between different countries. And so while also digital trade has already obtained a good standing in the global economy, existing payment solutions are not fully supporting cross-border digital trade. So historically, formal cross-border trade flows were conducted exclusively by banks through trade finance solutions, both at the enterprise and individual levels. And remittance channels have also been used for lower value transfers. Most e-payment services offer individual accounts, mainly designed for person-to-person or low-value remittance type transfers. Enterprise solutions remain limited, such as in the case of cross-border bulk payments, business-to-consumer payments, or consumer-to-business payments. So finally, what do we then see as potential entry points to try and move forward towards a more harmonized EAC payment system that would enable to reduce some of these transaction costs going forward? I think, we have to be honest. We at Africa Rise, we did a good situational analysis, I hope, of what the systems are in place currently, and we also tried to stock take most of the challenges. And we are proposing to go forward. I think we need to be a little more granular in some of these areas, and we need to get the players around the table to discuss these a bit more in depth. And of course, that's part of the purpose of this workshop. But I think a lot more needs to be done to try and move forward on these issues. So just anyway, in terms of some of what we think are critical points, it's emphasizing the need for more joint efforts between the regulators and the private sector and different development partners to address these long-standing regulatory and market structure challenges. We know that the World Bank, the EU now is also very much engaged in trying to support this process at the regional level, and that I think that partnership needs to continue at the policy level, and ensuring that regulations across the region are aligned and harmonized, as well as seeing how to connect these different RTGS initiatives and streamlining that process in going forward. The participation of non-bank entities in domestic and other payments infrastructure needs to be addressed, and it can be done by actually designing non-costly partnerships to foster direct participation in some of the core payments infrastructure. They've been very much left on the outside of this conversation up to now, and I think we need to better integrate some of these non-bank entities, particularly in East Africa, where they are a major player now, actually, with the non-bankable population. De-risking and complex regulatory requirements can also be addressed by developing payment rails that are less dependent on corresponding banking relationships. Also, financial service providers can invest in compliance technology systems that would increase accuracy and efficiency and reduce the risk associated with it and the burdensome requirements associated with compliance. Among the PSPs, it's also recommended that studies on pricing for cross-border payments are conducted, perhaps with a view indeed to establish what should the targets be in terms of charges, to develop more competitive pricing strategies to lower the cost of cross-border payments. To implement an effective regional payment systems and finally deliver on a monetary union objective, a strong institutional framework will have to be placed with payment arrangement governance well established as well. A report published by the Bank for International Settlements this year in 2022, referred to here, identifies 3 models for regional integration of payment systems: a concentrated model, whereby we have a regional regulator and a regional central bank and a centralized payment system operated by the central bank or the private sector. So that's centralized and concentrated at the regional level. We can have a more cooperative model, which is where individual national central banks and supervisory authorities share a common regional policy agenda and a centralized or interlinking payment arrangement. That's the system that we have in place right now with the EAPS. And the third model is a mutual recognition model, where there is limited cooperation taking place at the regional level. And so generally, the first model is considered to have the largest impact on regulatory, legal, and technical harmonization, and therefore will have perhaps the greatest benefits on the payment system, on the safety, efficiency, and integrity of the system itself. The issue, of course, with that first payment system is that it will require a high level of effort to achieve the governance model. And of course, a lot of sovereignty has to be handed over to the regional body, which will be a complex issue to achieve in a short period of time. On March the 1st of this year, the EAC Council of Ministers actually tabled before the Regional Parliament 3 draft laws which aim to pave the way for the establishment of the East African Monetary Institute, so a step before the central bank would eventually be established. So we are moving towards that first model of concentrated regulators and central bank, but we are not there at that stage yet. The Regional Monetary Institute would be one of the 4 institutions expected to carry out the preparatory work for the creation of the monetary union, which is an important stage in the regional integration agenda. For those countries that still don't have a full regulatory framework for payments, more effort needs to be made to complete that framework, to be in line with international best practices, and to harmonize the framework currently in operation in the region. There is no need to have an individual payments framework that doesn't align to being able to make cross-border payments. Regulations of the payment systems should aim to achieve 3 primary objectives, which is obviously to create safety, minimize systems weaknesses, and eliminate financial and economic consequences if there is systems failure. To try and minimize cost, ensuring that there is inclusion and there is developmental impact. And then finally, to ensure that there is that consumers' rights are protected and there is minimal illegal use of the system. And so these 3 minimum areas, such as technical standards, can be covered by technical standards, financial regulations, including licensing, operating requirements, AML or CFT regulations, data governance requirements, risk management and risk allocation, reporting requirements, oversight and supervisory management, as well as enforcement is all necessary to be included within that payments regulation. So support is needed in some of the EAC partner states to try and review and update their laws and regulations according to meet these particular objectives, as well as updating it with regard to data protection, e-payments and eKYC, which are not covered in some of the current payment laws. In the long run, at the regional level, we want an interoperable, technological neutral eKYC system. And just to say that the Afrexim Bank at the continental level through Mensa is looking towards building that eKYC system. We can also consider alternative data sources for creditworthiness and credit assessment at both the national and regional level, which would also lower transaction costs and improve, again, the targeting of risks. This particular system should link civil registration, identity systems. So we have a digital ID strategy as well that needs to be embedded into this, as well as appropriately and securely being accessible to authorized parties, such as the financial service providers in accordance with data protection laws. Only a couple of slides left. Thank you for your patience. Enhancing data collection and compilation is also important to improve the delivery of products, of course, but also to improve the transparency, assessing risks, and improving the integrity of regional payment systems. So there are several initiatives that could be considered or should be considered perhaps at the EAC level to equip, deliver, and report and publish data. And some of these recommendations were made under the previous Africa Rice intervention that we made last year to the EAC Secretariat. So strengthening the capacity for data analytics and reporting to member states, central banks and national statistics bureaus on the transactions, on the flows in real time. Develop regional surveys to supplement commercial central bank reporting and facilitate stakeholder sessions to review the findings of the assessment and validate regional level indicators of transactions. The formation of a regional working group in order to drive the initiative of bridging data quality gaps, which are quite extensive. Very hard, by the way, for us to produce this report with the data we had. So it needs to be, it is necessary, and it should be more transparently communicated. This working group could also oversee the coordinated detailed assessments of the current cross-border payments data collection and dissemination regimes, including identifying of demand and supply gaps and mapping ongoing initiatives and identifying best practices. And in this aspect, open banking could be an interesting area for exploration in the longer term. Among its benefits is the use of APIs to collect quality data in a pre-identified format from PSPs without the need for manually extracting it from the PSP's data archive, which could, of course, lead to errors and, of course, slowness. While there's no pressure to move directly into this direction in the immediate term, the EAC could already explore the different possibilities, such as via developing a white paper on the current trends in open finance, or exploring the different levels of APIs that fit with the regional and national policy objective. On that note, I think SWIFT has already also produced a white paper on this particular issue. And lastly, the last slide is looking at how do we improve accessibility to the payment system for all individuals and businesses in the EAC. Currently, we know that there is a big underserved population that is not bankable at this stage, and they're often the hardest to reach. And it has narrowed over time. There are a lot of initiatives to try and incorporate this group of people, but there's still quite a lot to be done. These underserved persons tend to lack access to finance, including the payment solutions, and just to say that trade finance solutions are often outside of their ambit. And I think the next panel discussion will be focusing on trade finance and go into some depth around that. So financial and digital training programs are important and would increase, obviously, access and the independence among these groups. Again, the better integration of non-banking sector into these payment systems, because it's the non-banking sector that is being used by these individuals, would actually enhance the transaction costs for these individuals as well. Also, we find, according to the World Bank's Global Findex report of 2021, that peer-to-peer learning, for instance, through women's self-help groups, is a more effective approach to enhancing financial education than other more traditional types of workshops. So again, there's many different initiatives that is explored in the concept paper as to how we might move forward at the East African level. So thank you very much for your attention, and yeah, happy to get some discussion going. Over to you, Madam Chair.
Thank you very much, Paul. That was a very, very comprehensive presentation. I think you gave the participants an opportunity to understand the entire payment systems ecosystem, the infrastructure behind it. So it's been a great education for many of us in the private sector. We only understand the symptoms, and the symptoms for us are high costs, delays in terms of time, taxes that come about as a result of this, and we never really understand the other side of the coin, and that's the infrastructure, the regulation, and how all that translates into this cost. So thank you very, very much for that. I'm going to invite questions. We still have roughly 14 minutes before the panel discussion starts. So I'm going to invite questions. I can already see 2 hands up, and that's Grace and Sam. We'll start with the lady, Grace. So please feel free to ask your question.
Thank you very much, and thanks for the invitation. My name is Grace Chokunda. I'm with the African Development Bank. I'm the task team leader for the East African Payment System project that was mentioned. So it's really exciting to be part of this discussion. And it's a pleasant surprise, because we were in the process of recruiting a firm to conduct an assessment for us to be able to look at the second phase. So some of the recommendations you actually highlighted, we're hoping those are some of the findings. Maybe we've already experienced some of the challenges you mentioned, and that's why we are looking at what do we do next. And it's good if you can share with us the report so that we can, and even maybe have an opportunity with the project team in EAC to see what it is you've identified that can be captured as we design the next phase, or what it is that we need to do in terms of doing a follow-up study so that we don't have to duplicate what you've already done. But I also would encourage that Teresia, I think, is connected. If she can say more about what we are doing. I'm glad you captured some of the elements about the ongoing projects. It was supposed to have closed, but due to COVID and other challenges, we are still ongoing. And I think you mentioned challenges of uptake. We know that that's something we've experienced. We were trying also to do an aggressive awareness creation, publicity, kind of trying to educate the users, the consumers, getting the banks to appreciate the need to use this system vis-a-vis the corresponding banks you talked about, because that's the whole idea of having this platform. So we're going to have a very comprehensive publicity campaign, but at the same time, we also know, we know that there are challenges, and we are looking to building to the next stage and having a more realistic integration. You mentioned European Union. We're trying to study and see how far we can go. So we are designing, we're in the process of designing a second phase, which will not only encompass rural integration, but we're also looking at the capital markets. As you mentioned, this program was actually co-funded with the World Bank. So we're trying to combine the two and see whether we can also bring DRC on board. As you mentioned, we tried to put South Sudan, and we provide really particular attention to country level capacity building, both in terms of laws and regulations, human capital, infrastructure, etc. So really, this is very encouraging. And maybe if you can, I don't know how I can get your email so that we can communicate and get to know the findings so that we don't duplicate, also learn from what you have identified as issues, and we incorporate them in our next phase of the project. I would encourage Telesia, our project manager within EAC, also to add some word or say something about what we are doing. But you've really captured it very well, and I wish we had been more coordinated and to know what you're doing so that maybe we would have incorporated some of the issues we are trying to address in our study we intend to do. Thank you so much. I hand over to you again.
Thank you, Grace, for your comments. I'm going to ask, I'm just going to allow maybe just one more question, and this is from John Bosco. Oh, so I can see Teresia is online, yeah. So maybe let me give an opportunity for Teresia to respond to what Grace has just said, please.
Okay. Thank you, Waturi. Thank you, Grace, and thank you, the panel, for the opportunity. The project, as Grace has indicated, we are looking at the next phase for the EAPS. EAPS, as you are aware, is the regional payment system that is using the local currencies. However, because of the challenges and especially of funding the system and the other challenges which are related to operational, the project has also been supporting. We want to look at getting a help desk software that is going to help the region to log in, and they're able to identify the problems, especially the settlement part, because as you're aware, you need to get the local currency to push through the system for the other bank to make to finalize the transaction. So there are many challenges with the current EAPS, the way it is set up. As you rightly said, it's a linkage, is not an integration of the whole system. So that is one of the areas we are looking at. She's also talked about the publicity. We've already done some shortlisting the companies that we hope they are going to carry this publicity so that there's awareness. As you're aware, being a central, it was more of a central bank system, so we never really included the retail side, the commercial banks, and therefore this is an opportunity now to tell them exactly how the system works and what they expect. And because it's using the same rates, so of course the charges are low, and we expect this to really be of help to our citizen. So without much ado, I think I'll stop there, but know that we are also looking in the same direction to ensure that we also lower the costs for doing transaction within the region. The other thing also the ADB are supporting us is also the Monetary Institute. That is one of the way we are going to make sure there's harmonization within the region. Everything is going to be driven from the same point. Thank you, Waturi, and the rest. I submit. Thanks.
Thank you very much, Teresia. I will now invite John Bosco Sebabi to give his comments, and then JB later. Please ask questions. Let's reduce the comments because we only have 7 minutes before the next panel starts.
Thank you very much, MC, and I'll just take 1 minute because it's not a question that I have, but just to thank the East African Business Council for the invited us for this, and also to thank Paul and Group for the work they're doing. And just like my sister from the FDB mentioned, maybe let me just introduce myself. My name is John Bosco Sebabi. I'm the Deputy CEO for the Pan-African Payment and Settlement System that has been put in place by the Afrexim Bank, of course, in line with working together with the FDB to do that. I'm glad that you mentioned about the Mansa platform for the KYC, which is being put to use for the whole of Africa, so that KYC issues can be dealt with quickly and they don't constrain businesses. So in the same breath, Afrexim Bank has put in place a payment platform. So I think we're already working with our colleagues in the East African community at the Teresian Group and also the FDB with Grace. So I think it will be a very good thing if we can also engage with you, Paul, so we can discuss further to see the issues, not only at the regional level, but also at the Africa level as a continent. So which will propel, of course, growth for the economies. So mine was just to thank you for that and the good work you're doing, and also to thank the team at the EAC and the East African Business Group Council for the invite and organizing this, because payment system is the key, is the linchpin for economic growth and business to thrive, and also a very good avenue for economic integration. Thank you so much.
Thank you, JB. And finally, the other JB.
Yeah, thank you, moderator. Just one, as you said, is to thank Paul and also thank John Bosco from PAPS and the team from ADB. My question is on underserved segment of the society, and that's our primary objective as EABC, the reach of the biggest segment. Again, as Paul highlighted, when you look at the biggest issue that the low growth of intra-regional trade is primarily hinged on our payment system. So once we reduce that, once we resolve that, then we'll be able to boost intra-regional trade. So I wanted to pick up from Paul your insight, how best could we reach those underserved segment of our society so that they are able to access these instruments. That is my question. Otherwise, I appreciate.
Thank you, JB. Paul, maybe you can answer that in a few minutes. We only have 4 more minutes left.
Good timekeeping. No, I think it's a very good question, very difficult question. Remember, here we're talking about cross-border payments, though, and so a big, to be fair, a big proportion of that population is actually not doing cross-border transactions. There are some that are in the informal sector, perhaps, that might be doing it. But what we're trying to look at here is, in particular, how would the MSMEs that might be wanting to do a little bit of e-commerce and cross-border e-commerce, how could they actually tap into that system? And I think, indeed, some of them are actually using the banking system, but the great majority would not be. And so we need to make sure that the mobile money operators or the fintechs that are offering very cheap payment solutions can be integrated in a secure manner into the payment system. So I think I don't think I have the answer right now, but that's what needs to be worked on, right? Is listening to them as to what the problems are in terms of moving forward. So these mobile money operators and other types of fintech solutions are, I think, a key for moving forward in this area on cross-border trade, cross-border payments.
Thank you, Paul. Robert, one very brief question, please, so that we can move to the other session.
Thank you, Paul, for the presentation. My big concern, I happen to have been working on East African guidelines on cross-border mobile financial services as a project from the EAC, from the GIZ, in collaboration with the EAC. But my biggest concern at the time was that as much as it is good to have the regional cross-border mobile financial services, which already had started with the One Network area under the Northern Corridor for the three countries of Kenya, Uganda, and Rwanda, and Tanzania and Burundi were just supposed to be part of the wagon. One of the key issues was that although the payments were possible at the time, and now from your explanation, they're actually much better now, the issue remains the paybacks. Like if there's a transaction that has been made because of a service or good that has to be delivered across the border, if the good is not or the service is not what the person paid for, how do we get the payback so that the settlement is covered, so there's no loser or winner? That was one. Two, there were still issues of data and cybersecurity related to the transactions. If someone has sent money but has made a mistake and sent to the wrong person, how do you get that settlement done at the East African level? It's easy with MNOs within our home countries, but then cross-border becomes a little difficult because you're involving many players. You're involving central banks and you're involving MNOs. And at the point of my project, that had still remained a big constraint. I don't know how your project has been able to address those issues. Thank you.
Short response, Paul.
Short response. Thank you very much, Robert, for raising those issues. I think, yeah, they're very relevant today, right? That, as you say, that hasn't been resolved. On the payback system, I think one of them is the problem of policing the platforms that are actually making these e-commerce sales. There still isn't proper management and control over these platforms. So that should be, if you look at an Amazon consumer protection area and customer service policy, there are return policies in place, and that can be managed by the platform itself. That is not the case in any of the platforms I've seen so far in Africa to have anything as developed as that. So I think it's the platform's responsibility, but the platforms need to be properly regulated, that they are enforcing consumer protection in that case. You can also have an escrow system where you could also not pay the full amount and pay it once, part of it on receipt, but that's going to be very risky for cross-border transactions. So I think you need, again, it has to be at the platform level for where the sale actually takes place. I think on the if you've made a wrong payment and you need to get that money back, I mean, at the moment through the traditional payment system, you would obviously use a SWIFT system to try and claim that money back if there was a wrong payment. And it's very, very costly to do so at this stage. And that indeed is an area, I think, where we could also try and reduce costs and make it more efficient. If there is the integration of the MNOs into the system, then I guess you can also reach through the same messaging system these MNOs as well. And so we need, I think, a better integrated, interoperable system that integrates all these different players and reduces the cost in terms of doing so. And I think that is something that could be worked on in going forward. But you've worked on this quite a long time. I'm sure you have also some very good ideas in this area. Sorry, we don't have much time. Over to you, Madam Chair.
Yes, so thank you very much, Paul. I would like to just thank representatives from the EU who spoke. On behalf of Jocelyn, and I'd like to thank EABC for their welcoming remarks. And finally, I'd like to thank Paul for a very, very comprehensive presentation and for answering the questions that have been raised. So I just want to now invite Mr. Nathan Ashaja, the Senior Advisor for the Private Sector, who works with Africa Rise and the EU, to now take us through the next session, and that's the panel session. Thank you. Over to you, Nathan.
Thank you so much, Ms. Watuli, for a very excellent moderation. And thank you everyone for attending this webinar. I wish to straightforward invite and introduce to you our panel members today. We have Ms. Adeline Mukashema. She is the head of payment systems at the National Bank of Rwanda, and I have seen her, she's online. We have Mr. Raf Rigarama, is the head of payment system at the Equity Bank of Tanzania. Mr. Raf will take us through how the financial sector services in the private sector perspective is looking and considering on these payment systems. We have Mr. James Rukuru, is the Deputy Director for Payment Systems from Bank of Uganda, and they are all going to share views on this harmonization of payment systems in the EAC. Without further ado, let me straightforward invite Ms. Adeline. And much has been said, Adeline, but we need to understand from the horse's mouth. The central banks are the initiators, they are the regulators. The central banks are the implementers so far of these payment systems. How is it benefiting? How is it benefiting the private sector? And if you can touch on SMEs, then that would really help us. And in addition to how it is benefiting them, please enlighten us on the existing challenges. And people have alluded to high charges. High charges. Any work to harmonize these charges, anything done to harmonize these charges so that it can have a positive impact on our businesses. And lastly, you will tell us what are the entry points. Paul mentioned entry points or to have a harmonized system. Thank you very much. Karibu sana, Adeline.
Thank you very much, Nathan. And thank you for inviting us to this webinar. As per the previous remarks and the presentation of Paul, the harmonization of payment system is very important to the monetary union we want to achieve, and some work is being done. It's being done in the all EAC partner states are participating, including Rwanda. Maybe I can give you some initiatives we in that regard. As Rwanda, we joined the EAC since 2014. EAC, East African Payment System, and all commercial banks now are participating in that system, and private sector can use the system to pay across the region. We also have those mobile payments from subscribers of MTN and the Airtel, which are mobile network in Rwanda, operators in Rwanda, can send money across the region. So that's very, very, it facilitates payment, cross-border payment transaction. But also we have those international cards which can be used on the EAC countries' terminals to pay either ATM, either POS or POS. We also have those regional banks which facilitate payment transaction across the region, but also we have those remittance service providers, also those facilitate
those transactions. So a lot of work has been done as far as infrastructure or service provider are concerned, but also we also did a harmonization on a legal and regulatory framework, where we have even committees on that. And for example, we have regarding like taxation, we have some harmonized clause on taxation where those technology devices, including payment system devices such as POS and the others, are just they don't pay those custom duties. So this also is a result from that harmonization, and a lot also is yet to be done, yes, but also a lot has been done. So we really thank those initiatives, and these benefit to all categories of people across the region, including the businesses, including and the individuals, and they benefit that efficiency in the payment system because the transactions are fast and efficient and they safe. We also harmonized some security standards and technical standards to boost to facilitate or to encourage, to promote the security of payment transaction. They also benefit like that convenience, that low cost. If I focus on the East African payment system, which as it has been explained, which allows those regional currencies to avoid that exchange cost, so and they reduce cost, transaction cost, they benefit from that facility as well. So also the other benefit the people get from the harmonized the payment system is that they can benefit to benefit from that efficiencies. I have talked about it, but also they can benefit like business or private sector which carry out the businesses activities. They can benefit from that wider business or wider ecosystem as far as payment system is concerned. Because if people here can serve Rwandese, they can also have touch on that market in the whole EAC region. That also is the benefit because the payment system is facilitated, and then the trade across the region is also facilitated. So that's really a good advantage from the harmonization. Regarding the challenge, yes, we have done a lot, but still challenges are there, and they are working on them. Some colleagues like Teresia have raised some of them. Even the presentation by Paul, it included some challenges. We have some challenges, and we are working on them. For example, the key one is the key one is related to road trade within a region, because we have harmonized. We started that harmonization to boost the trade across the region. Yes, some increase is there, but it's not at the level we want to achieve. For example, I can give example of Rwanda, where in 2021 we did the export of more than 600 million US dollars, but only 10 million have been channeled through East African payment system. So this is maybe the system, yes, is there to boost the trade, but also trade could also boost the system usage. So they are complementary, if I can say like that. So this road trade is a challenge, but also there is because the system, I'm focusing on the East African payment system, because the system is only using a local currency. It's also limited because those currencies are not since that they are not accepted in the countries. For example, you cannot. It's not easy to find Rwandan francs accepted in Kenya, or Kenya shillings accepted in Rwanda. So it's maybe the people they still have that resistance to accept those local currencies, and that it's a challenge. As Teresia talked about the publicity, yeah, that maybe will help us to alleviate that challenge. We also have there is also a challenge of competition with those correspondent banks. It's still there where people, this is related to low awareness, low publicity, because people may not be aware of that system and the advantages related to that. Yeah, and so then that limit the usage of the system. We have also there is also a challenge of like limited channels or use cases to the system. Maybe in the future, in the further steps, they will add some other use cases, because some question was about like interoperability of other channels. Only if there is only those banks, those commercial banks, which can send the money through the system, but also we need to see maybe mobile payments to the system, or cards, payment cards to the system. This will be done to reduce the cost, the transaction cost, but also increase the acceptability of those other transaction channels. And also we need to see like those which are on this on this regional payment system, such as the mobile or card. Those are P2P, person-to-person transaction. We need to see also the like a merchant payment be accepted through across the system, across the region. Maybe IPS can also help to add on other use cases to facilitate payment transaction across the region. This will help a lot for inclusion in the region. Regarding maybe what we can do to improve the harmonization. It has been touched on by the Paul through his presentation. But even if we started the harmonization, and all countries are they are working on the same direction, we still have some work to do. As I talked about it when across through my this talking. So we have harmonized, but for example, we need to harmonize the further those infrastructure. Like I said, the switches or the card switch should be harmonized so that our local brands, like in Rwanda, you have that smart cash cards, so that it can be accepted across the region, in Uganda, in Kenya, Tanzania, and the other countries. But also mobile payments can go through like a central system to reduce the cost. even if we do it now, but it's on a higher cost because they are linking on bilateral basis, and this is costly to the service providers and at the end to the customers. On legal and regulatory framework, maybe we need to harmonize the further. For example, on the licensing process, when one service provider is the license, for example, in Rwanda, it also has to be licensed in the other country, in the other EAC country. And this is like a double work, and it's costly to the service providers. So it will be better if one service provider, for example, can serve all the people in the across the region, and even if he has a license, for example, from Rwanda or from Burundi, and it is allowed to serve the entire region, this will be helpful, and it will help to reduce the cost to the customer. And improvement is necessary for publicity. Teresia talked about it, and the ADB representative, they talked about it. I think maybe these EAC systems are not used as we want. Maybe it's because it is not known. It's not known by businesses. It is not known by individuals. And if there is like aggressive financial literacy awareness, and the private sector federation and banks are involved, they may bring the system usage at some level. So that's will be very good, and the initiatives and to help to boost that harmonization of payment system towards that monetary union we want. And some key stakeholders I would just recommend as being involved in that further harmonization at the further stage. I'd just say that central bank will play a big role because they are a regulator. As Nathan said, they are a regulator, they are overseer. So we need to harmonize further our laws and regulation to put in place like an enabling environment for those private sector to see if they may be service providers, they may be customers, they play a big role, they play all the roles in the payment system ecosystem. So our laws and regulation should be harmonized to facilitate all those roles played by the private sector, those enterprises. But also the PSA, the private sector federation, and the banks, including banks and the businesses, they should be more involved in the sensitization to people for these regional payment system and instrument utilization. And finally, as I said, the switches, local switches should be interoperable. It should be interoperable so that those channels talked about cards, mobile payments, be accepted across the region, but also other use cases should be also brought on board to those payment transactions, such as those merchant payment I talked about. I think that's all. Thank you.
Yeah. Thank you very much, Adeline. You've given us a very good insight on, but again, you've given us some good questions for Mr. James Bukuru. James Bukuru is the Deputy Director, Payment Systems at the Bank of Uganda. With your experience, Mr. James, we need to request you to carry on from what Adeline from where Adeline has stopped, particularly on further harmonization for the benefit of private sector. James, when will mobile payments be integrated across EAC? That it is a question of curiosity on further harmonization. When will licensing of service providers be at once? Just when you are licensed in Uganda, then you come and operate in the rest of East African partner states? And James, when will East Africans use shillings when they're in Rwanda or Kenya or Tanzania or dollar? If you adopt a dollar, East African dollar, when will East African use this single currency to mitigate the transaction costs? And you do this, you give us your views, considering that these private sector players, SMEs, corporates, are the real implementers of your regulatory policies. Thank you so much. Karibu, James.
Thank you so much, ladies and gentlemen. JB, who moderated the opening session, and Adeline, who had just spoken before me. Mobile payments, indeed, in the region are driving inclusion. And as far as our population is concerned, it is like if you walked on any street, either in Nairobi or Kampala or Dar es Salaam, I think every 3 people you meet, 1 has a mobile phone, be it the USSD phone or the smartphone. So it is very easy to actually extend financial services through a mobile phone. No wonder mobile pesa, M-Pesa, captured the opportunity and took that space in Kenya. Uganda actually followed suit maybe a few years later, and down those strides, we are moving on and moving forward. So I think the thing that we have to do as East Africans to drive, what will drive in this space is to have a platform where the mobile phone companies can be interoperated. For example, what I mean, can we have a central place like a national switch for all the countries so that we can interlink our national switches? If I have a national switch in Uganda, there's a national switch in Kigali, we have a national switch in Dar es Salaam, linking all the sister states in the region, such that in terms of the driving forces for mobile pay or payments, the low value payments, it's the mobile phone, such that it will be very easy for somebody owning a shop down on Kampala Road to quickly transact with somebody in Kigali. So I think those infrastructures that are not there, we must build them. For example, in Uganda, we don't have a national switch, but plan is underway to procure one before the end of the next financial year, 2023. So we've already engaged the stakeholders using our development partners that have been helping us, and the central bank has agreed to finance the initial phase of this piece of infrastructure so that we can have the P2P cases into this national switch. We'll start with the plain vanilla cases, the P2P, then we move on to the other sophisticated cases, the system. Then on the licensing, Nathan, on the licensing of service providers at once, I think this would be very beautiful and a very good idea, such that to be like an East African driving permit, so that you can drive across the region without anybody asking any question. So if I'm licensed, if our regulations can be harmonized to the extent that if I'm licensed in Tanzania as a provider a service, there's no need for me to again to have another license to operate elsewhere in the region. To me, that would be a double taxation. Because we're in one region, we simply need to harmonize our laws, regulations, and systems, such that the moment I get to know that you've been licensed in one country within the region, the standards are the same, the rules are the same, the laws are the same, and the principles are the same. So in that way, I think it will be very easy to achieve that one. Now, thirdly, Nathan, on the East African, either US dollar, I mean either dollar or whatever currency that we may agree on, the East African currency, I think this is what is going to help the private sector quite a lot, because you know the limitations of the dollar and the exchange rates, and the issues to do with the compatibility. You know, today, even if you are moving across the region, you need to go with the dollar. So probably because there are limitations to your currency in the other currency, in the other country, like Adeline pointed out. It's very difficult for a business person to move across the region, for example, with the Rwandese francs. So I think the strides that the effort that the countries should put in this matter, to me, I think would be steps in the right direction. A common currency, I think, is the pinnacle of regional integration, because they are the hurdles and the challenges of the euro, the dollar, or our individual local currencies. I think the problems associated with these currencies across, when you are moving across regions, are well known. So I think it goes without saying that the East African common currency, or the East African dollar, or single currency, to me, it's going to do wonders to help further and harmonize trade and improve trade within across the East African countries. Thank you, Nathan.
Thank you very much, James. We may come back to you. Very good on, you are very audible on convertibility, and this is all what we expect. And we are very sure that the central banks take the lead on this. Now let's have the commercial setting, the private sector, the implementers. We are now from the regulators. Let's hear the implementers, Mr. Raf Ligarama Jasi from the Equity Bank of Tanzania. Equity Bank of Tanzania is one of our East African bank. Jasi from is the head of payment systems at the Equity Bank, and we wish to request him to talk about other initiatives from the private sector players, including his bank, on what they are doing to contribute to payment systems. So just, are there other initiatives from the commercial banks, particularly the Equity Bank, on the retail payment systems that can penetrate deeply and reach to citizens and reach to ordinary people like myself? And what is the level of penetration? You may not have done the survey, but how many use these retail payment systems using the Equity Bank? You might use your experience, because Equity is everywhere in East Africa, and share with us the insights. Thank you very much, Jasi. Karibu sana.
Asante. Thank you very much, Nathan. Good afternoon, everyone. As Nathan introduced myself, I'm Raf from Equity Bank Tanzania, and heading the payments and international banking. So this, what we are discussing here, is complete my, it is under my territory. Yeah, briefly regarding the equity with the cross-border payments, we have done initiatives since Equity. It has branches across the East Africa. That means we are having presence to Tanzania, Kenya, Uganda, Rwanda, DRC Congo, South Sudan, and of course, very soon we'll have represented, open Ethiopia. Currently, we are representing. So having 6, availability of equity across the region, that makes us a huge potential to facilitate payment across the region. And in particular in Tanzania, since we are supporting the landlocked countries across using the Dar es Salaam port, we also provide an end-to-end solution to support that facility of paying their consignment while they are in their countries. So this is happening in history in East Africa, in EAC, I may say, that there is initiative which we have done already, and we are operating them, and it helps us to simplify way of paying, or way of transferring money from one country to another. So through the equity network, we supported the cross-border payment, whereby if a customer is in the DRC Congo or is in Rwanda, he can actually access or transfer his account which is in Tanzania, and vice versa is true that this customer, if he's in Dar es Salaam or in Tanzania, he can also access or transfer money to his country, whether it's Rwanda or Congo or is Uganda, and likewise. So on cross-border, we manage that, and then the turnover experience and the response which the region citizen accept that payment is promising, especially for those who are doing business, because of the nature of the transaction which are passing through the cross-border. More of them are of business, because as I mentioned that the Tanzania is a hub where it's connecting other countries across the region. We have 2 regions here in Tanzania. We have which are connected. We have EAC, and of course we have a SADC. So you may found that for those countries which are also in SADC, we support them. The countries which are in EAC, we also supporting them. And this has been a very good experience, if I may mention that. It was a very tough for a person from, let's say, from DRC Congo, doing business with the Tanzania business people as well, where they used to color cash from DRC Congo, and then come to TZ or Tanzania and do transactions. So using the cross-border, it has been reduce this risk of business people carrying cash and coming or travel for a long period of time with the cash in their bag. Well, now they can do it transaction, from where they are and settle their consignment or their businesses. This has been a very good initiative coming from Equity to support the East African citizen who are also looking on a possibility to expand their business as well. So through the payment which we are providing, it helped them a lot. And the transaction are not, you cannot compare with the MT103, the SWIFT one. This transaction almost real time, because once you do transaction within a short time, maybe 10 to 15 minutes, it is reflected to other account sites. So that has been implemented based on the equity network, because we have a good network across the East African countries. But we have initiatives which we have done already. As some colleague mentioned that we have this traditional MT103 mode of payment, but there are modern way of payment which you also trying to see how we can adopt. We have done some of them through the other payment hub such as RTGS, SADC RTGS, TCIB, MFS, PAPS. You see, all these are coming, giving us a challenge that we are in a community which we have around more than 200 million population, and we are trying to see how we can establish a hub. So perhaps through EAC, maybe we needed to have a similar hub which will connect all together so that we minimize the cost of transferring, cost of paying, which will help us a lot in terms of interoperability between country and country, and as well interoperability between the businessman, the business people from each country who can do a business across the region. So among of the initiative is to propose to East Africa. As a private sectors, we see there is a potential, huge potential to have that hub in East Africa, which perhaps will be EAC hub to support these payments across the region. And it will not only facilitate payment through banks. We can facilitate payment through the even MNOs. Nowadays, there is agent banking across the region because there are some other customers who are cash based, so we can also support them to do their transaction across their street and with the cash. So I don't need to go to the bank where I needed to prepare myself and take a car or a bit distance to find a bank. So I can use the agent to transfer money from Rwanda to Tanzania. I know Rwanda, they are doing business with the Tanzania and Kenya, for instance, so they can use agent to transfer money to the Kenya or to Tanzania as well. And because we are in East Africa, again, I think the issue of single currency is also very important, just to support this payment facility. That will be also help us to make sure that to get into the digital payment era, which is everybody is talking about it, and simplify our lives, and of course boost our business and fast track the services to our customer across the region. There is a few challenges because we're still using this traditional RTGS. So the main challenge to the RTGS is the cost. The cost is too high compared to if we could have a hub which will facilitate the interoperability across the region. The cost normally being reduced in such a way that everybody can afford. The retail, the customer who consumer, and the business people who are doing business transactions, they can also afford to pay through that, and I'll be happy that they are doing business with the merits. Another thing with the current setup, which we are using the traditional RTGS, is a settlement. Settlement normally is T+1 or +2 sometimes. It depends with the banks we are corresponding to. So that is a main challenge which we have seen this when we are designing the cross-border equity cross-border payment method, so that we reduce that time to 15 to 10 minutes when you do transaction across the region. On initiatives, what we are doing right now, as I mentioned earlier, that we collaborate with the fintech. We came across and understand that the fintech are no longer competitors. Fintech are partners. So we open the bank now to collaborate with the fintech in such a way that they will bring a transaction which will be facilitate the business, or any transaction which is of course genuine. We have to do some due diligence to make sure that the transaction are coming from genuine, and we are not facilitating any AML. As I mentioned, few of the fintech which we collaborate with them, the TCIB, NALA, for instance, SADC, RTGS. There is other partner from Europe, such as WorldRemit, MoneyGram, and etc. etc. All these remittance company or remittance partners, they are pushing transaction to a regional, to the Equity subsidiary to service their diaspora who are living abroad, for instance, and make easy to send money to their family, to their friends, instead of using Swift MT103, which is very expensive. You cannot afford it to send, let's say, $50, and then you have been charged $50. So you see, it is very expensive using the MT103. And of course, the point of a number of correspondence bank, it's look like a very traditional way of transacting between the region. So this is an initiative which we are trying to continue onboarding more fintech, and I wish I could onboard as well the EAC payment hub, which will connect all East African countries. And when it comes for these other remittance or fintech, for instance, PAPs from Northern Africa or MFS from South Africa, South Sudan, South Sahara countries, they are supporting the payment across that region. You may find that we could have eliminated the point of transaction delayed based on the it has to go somewhere and then route to respective or to the beneficial customers. So the initiatives is more on how we collaborate with this fintech. And I wish one day we have the EAC, as I mentioned, that we have an EAC payment hub to support the cross-border across the region, make easy and secure payment through the region. Of course, there is a need also to see how we can establish through the. I'm happy that there are some central bank team here. They can see how they can start thinking about central bank digital currency, or start with the digital asset as well, so that we see, because currently we see for instance, in Tanzania, the government of Tanzania allow the East African people to buy bonds. You see how now we are transforming from the fiat to the digital. So I'm also concerned that as an East African, we should have thinking and see how we can get into the CBDC, so that we all having a chain of transaction which will be transforming that. If the world is going to digital currency, why not our region get into digital currency as well? So those also we are thinking about that. The crypto, yes, there is an element of risk, but we are not stopping thinking in how we can get on board on that, and try to see how we can mitigate that. But perhaps through the EAC, you can see how you leverage on how to obtain the crypto, because there are some banks which already get into the crypto, like Refro Crypto, which is supporting some few banks in Asia, particularly Japan and Europe. So we should not be behind in terms of this revolution which are supporting the lives now. Again, since we have, for instance, in particular in Tanzania, we have this port, and Kenya have a port as well, and other country using these two ports, for instance, for their consignments. I wish I could have established a blockchain in supply chain where we support this transaction through the ports. The case study which I found to be very effective, it was Singapore. Singapore, since they established a blockchain in the supply chain, even the port is very efficient compared to before they established and joined to the blockchain. So this is a discussion which is ongoing, and I wish to recommend in this platform that the technology should be our lives, should be our part of our lives, so that we adopt and we implement after we have done some few studies, and then we go rather than continue supporting the traditional banking or traditional mode of payment. It will take us, it will back us as if that we are not in the digital world as at now. Yeah, I think in a nutshell, I've explained what we are doing, and we are very active and hunger to grab the entire simplicity of mode of payment across the region. Thank you, Nathan.
Thank you so much, Raf, for a very comprehensive insight. Yeah, the last part of it was on digital payments. I saw my senior brother from GIZ who has done some good work on e-payments across East Africa, Daniel Willett. If Daniel Willett is listening to me, I can give him 1 minute of what they've done. Some other colleagues have alluded to instant payments, digitalization of our payments. Daniel, can you hear me? Can you share an insight on the good work you've been doing?
Hi, Nathan. Nice to see you again here in this format. I think we as GIZ have done a number of different things and I come from a GIZ project called the Pan-African E-commerce Initiative, which has as its goal to improve the conditions for companies to engage in cross-border trade, particularly digital trade across the continent, and we have a particular focus on the EAC region. So Paul has alluded already to some of the work that we've supported, and we worked with him and the Smart Africa Alliance on developing a Pan-African blueprint for how payments could be encouraged to facilitate digital trade. And obviously it's been mentioned by a number of the private sector people, including Mr. John Bosco Kulisa before, about the challenges of time related to that. So you mentioned instantaneous and some of the returns. Robert Ford also made the point around that. So yeah, I think to expand on the blueprint, given he was one of the writers of it, I think Paul could probably give a much more detailed and comprehensive sort of look at how instantaneous sort of fits into that. But we have also worked with our colleagues at the EAC Secretariat and the partner states as well in the development of a e-commerce strategy for the EAC region. We are very happy to see that that was adopted in May of this year, and we're looking at how we may support implementation of that. But payments is a crucial pillar to enable digital trade in the region. So that's why you see me there. But thank you, Nathan.
Thank you very much, Daniel. We are towards the end. Shortly, I will invite our CEO, East African Business Council, for the closing remarks. But I saw one hand raised from Robert Ford. Robert Ford.
Yes.
Yes.
Yes, thank you.
50 seconds.
Thank you. I will try to be as brief as I possibly can in the interest of time. I have 4 important comments to make, but I'll make sure I'm very brief. The first one is, I wish to leverage some of the experiences from countries within the bloc, and specifically from Rwanda, where I have just concluded a consultancy on the authentication seal for the e-commerce companies. Why is it important for the region to adopt the e-commerce authentication seal? It's because while transactions are being done across the platform, it's very easy for anyone to just come and call himself e-commerce A or e-commerce B and post stuff for his other colleague on his platform, and people are just going to make orders and pay and make payments, but may never deliver the product because they are not actually the authentic people, the authentic businesses. And because of that, in Rwanda, under the Rwanda ICT Chamber, we've been able to develop what we call the Rwanda e-commerce authentication seal or label, which is apportioned on every authentic website with it's barcoded, it's QR coded, and that helps in making people identify the authentic and the genuine shop where they can be able to make online purchases. This is something I think could be developed at the regional level. Secondly, I wish to also bring to attention, how do we secure the cross-border products safety? If it's a perishable product, if I'm ordering some oil from Burundi into Kampala, and the distance it takes to have that product delivered, and by the time it is picked and used, it either has become stale, or it has expired, or it's now dangerous to human consumption or to human use. This would have been an e-commerce transaction that has aided a sickness or has aided bad dietary practice into a family or something like that. How do we make sure that as we work towards payments to make sure that e-commerce is properly done, how do we make sure that we also secure the products that are moving across the border and they are good for human consumption or human use? Then the third, which I think one of the past colleagues has talked about, is how do we integrate crypto payments model in our cross-border payment framework? Because some of the the payments of tomorrow are being very fast transformed into crypto payments. And we seem to be dragging behind in how we do this. We need to, I think at the East African level, to begin looking at this. And last but not least, how do we create a platform to share some of the best practice experiences from the countries in the region so that we mitigate some of these issues we are talking about? Like the example just given of the Digital Business Institute, an arm of the Rwanda ICT private sector organization that is now working on the platform for the e-commerce authentication seal. I submit and thank you very much.
Asante sana, Robert. We are closing our session. I wish to thank the panelists. Some of them, we invited them on short notes, but they are very positive. Thank you so much, James from Bank of Uganda. Thank you so much, Adeline from National Bank of Rwanda. Thank you so much, Raf from the Equity Bank of Tanzania. Thank you so much, John Bosco Sebabi. You all responded positively to our request, and you really showed that you are very good East Africans who wish our region to integrate financially, economically, in all sectors of life. We appreciate your insights, and we hope to see you again. Let me invite the CEO of East African Business Council to have a closing word and a way forward for us. Thank you so much. Karibu sana, Mr. Karisa.
Thank you very much, my brother Nathan Gashaija. Allow me to again record my appreciation to the EU Africa Rise project that has been very instrumental in terms of knowledge creation, knowledge generation, and supporting this initiative. And I want to put on record the good work done by Paul in terms of the assessment. It has really it has enlightened us, all the stakeholders, where we stand. But what came out strongly, again, which is very, very paramount as key takeaways from this webinar, is that we need to do more around the infrastructure that are required for the digital cross-border payment to thrive. that has been ably highlighted, articulated. Our currency, convertibility of our currency, it has been the issue. There is a very low uptake in terms of our currency being convertible and being used across the region. That has an impact, a detrimental impact on intra-regional trade. And I think that's the message we need to convey to our policymakers in terms of how do we address asymmetries related to cross-border payment systems. East African payment system has been in existence since 2014, but still very low uptake. We need to double our efforts and engage more often in terms of addressing those challenges related to legal regulatory framework that would enable IPS to thrive and perform its duties. I've also taken note in terms of risk profiling, risk mitigation, perception associated. Countries are still operating in isolation. We need to ensure that we have a very robust risk mitigation measures. And again, that also comes down to retail. The way the system has been crafted has been more oriented around the formal sector. But again, we need to try to be innovative in terms of having a test and learn approach and create a room for innovation. I'm happy EABC is working with GIZ in terms of digital inclusion, in terms of digital literacy. The project will be rolling out. We'll try to address these issues. It's also important that among the key takeaway that we need to create a competitive market environment, which will be able to reduce those operational risks and other risks that are associated with our cross-border payment. Interoperability is an important for achieving. I think it has mentioned by all the presenters, the panelists, how interoperability is very important and we need to enhance it. In the industrial-led approach, it's very important. We need to ensure that there is a sufficient buy-in by the users to achieve the scale. So cooperation in infrastructure development is also very important. Among the three models that highlighted by Paul, I think we need to explore and move forward in terms of achieving a model one that is very suitable for EAC. So again, on our core as EABC, as Africa Rise, the issue of training, skills enhancement, awareness through our national. I remember I recall the presenter from National Bank of Rwanda said using channels like Private Sector Foundation or Private Sector Federation of Rwanda, who are a member of EABC, in terms of awareness creation. I think it's very important, and that's where we will request Nathan as a coordinator to request Africa Rise, EU Africa Rise, in terms of awareness creation, because there's a very huge gap in terms of information. Again, I look forward to continue engaging John Bosco Sebabi on PAPS, Pan-African Payment System, which is an African initiative that is going to address issues of currency, exchange rate risks, currency convertibility, and I'm sure they have a number. Of instruments, but overall they may have funding for sensitization and awareness creation activities. Finally, which is very important, the issue of establishing regional association of bankers. I've realized that banks, both central banks, they have been working in isolation. We need to have a very robust, strong regional association of banks to address these issues together and work and bring those different instruments together, including the support from African Development Bank, the support from Afrexim Bank. They are in different support initiatives, but they are not coordinated, they are not harmonized, they are not aligned. So having a regional association of bankers coming together, convening all the stakeholders is very paramount. Again, finally, harmonization of our financial rules and regulations is very paramount. So with those few closing remarks, again, I thank you, Nathan, thank you, Waturi, thank our excellent panelists from all the central banks. And I want also to thank my brother John Bosco Sebabi for finding time to join us and share insight. And I see his hand is still up. Perhaps I'll give him 2 minutes what the banks, African Bank is going to offer to the EAC to address those issues that have been ably highlighted by Paul and the panelists in terms of how do we move forward? How do we move forward? And I think on EABC and the GIZ, as I mentioned, we are keen to move, and Africa, EU Africa Rise, we are keen to move, but we need support of our stakeholders. So allow me, with your permission, Nathan, I hand over to my brother John Bosco for one minute, then we close this session. Thank you very much.
Yeah.
Over to you, John Bosco.
Yes,
thank you, JB, and thank you, Nathan.
Yes.
I will just take 1 minute to thank you, first of all, for the platform to be able to share with our colleagues in East African region. And two things were expressed by the panels. We had one of the issue of currency, whereby, usually the currency has a derived demand. So if there's no trade happening between countries, this currency will not be demanded for. So I think that payment systems come in to solve this issue. And also in terms of the PAPs, how we approach this is that we have, I think the colleague from Bank of Uganda mentioned about switches and having them connected at one point. Actually, as PAPs, we have signed up a couple of switches, including the Rwanda switch in Rwanda. So we certainly welcome any national switch that can come on board. This harmonizes the whole payment systems. So I'm certainly very happy and very willing to have a further discussion with the team in East Africa to be able to discuss PAPs further, and then we see how we can support the payment systems in the region, in the East African region, but also at the continental level, so that we can make sure that East Africa is purely and wholly integrated in its own, but also at the continental level. So thank you, JB, thank you, the East African Business Council, and thank you, Nathan and Paul, for the research. We look forward to reading through your research and then being able to work on some issues together. Thank you so much. I hope I've respected the 1 minute, JB.
Thank you so much, JB Sebabi. Let me request everyone to turn on the camera so that my colleague Patrick from Communication Department can take a photo. And we are all appreciative of your discussion, of your ideas, and we hope to meet again. We need to integrate our region, as earlier mentioned. Cameras on. With the current audio-visual, digital photos are needed, and yeah, thank you for turning on. Thank you for turning on. Thank you for turning on. Patrick, are you there?
Yes, I'm getting the
Patrick.
photos.
Very good. Very good. Thank you so much. Is this enough?
One last one.
Okay.
Smile.
Patrick is the head of communication at EABC. You normally see his emails.
Yes, smile. Thank you very much.
Oh, thank you so much. And we are closing. Bye for now. Thanks for your time.
Thank you so much.
Thank you so much. Thank you, Nathan. Thank you, everyone. Thank you, all the participants. We look forward for another forum.
Thank you so much.
Thank you, EABC. Thank you,
EABC. Thank you, everyone.
Stay safe.